man, so a bloody day in the markets. We've got Bitcoin down 3.5% almost, sending FANTOM down 8.5%. It's almost tanking down right now, and there is no letting up to the bleeding as we speak. At the time of recording this video, Bitcoin is at a critical level, as is FANTOM, clinging on to a little bit of hope, which I'm going to show you in the charts, but I'm also going to share with you the bearish patterns to the downside as well. We're going to marry up that with the fundamentals, in terms of what's happening in the macro economy, what is causing this bleeding to the downside, and why is this pressure weighing in on the crypto market. So if you appreciate that, smash up the like buttons, don't forget to subscribe, and as always, these videos are brought to you by myself. Yes, if you want to join our course member live streams, consider heading to ijaz.uk/member. The link's in the description. Get set up, find out how to join our course member live streams from that link below, and you'll get access to 3 times weekly live streams where we talk about technical analysis, we can critique your portfolio, we can do tokenomics, and a whole bunch of other stuff. But that's not what we're here for right now, because what we're here for right now is Bitcoin, really, because FANTOM is going to follow Bitcoin, and we know Bitcoin, I'm going to come on to it, is following a certain trend. But I've been sitting here like a sado watching this on the 5-minute, because on the 5-minute you can see we are hovering very close to the bottom of the wedge. Just to zoom out to show you what this white line is. This white line is this line here. Okay, you can see we entered back into our wedge, and now we're coming to test this white line here, which I've got selected. So just coming back across to the 5 minutes. You can see we've tested it 1, 2, 3 times. We're trying desperately to hold on to this level, but it doesn't look good. The strength is on the bear side. The bears are in control of this market. There's plenty of room on the RSI for this to sell off a little bit more, and that is why we need to have caution in this market right now. If you've not watched my Bitcoin video from earlier, where I go in detail into the Bitcoin chart on all the different time frames and explain in detail the macroeconomics, make sure you go watch that video as well, just to complete your understanding of what's going on. But in terms of Bitcoin here on the 4-hourly chart, you can see that this came as no surprise to anybody watching this channel. All you guys who have been watching, guys and girls who have been watching these videos, and particularly have been a member of my course member live streams, there's no way you were caught out by this move to the downside. I mentioned it very clearly on the videos when we got rejected by 48,000 that we were coming in for a retest. At that point, I mentioned this was looking particularly weak and we were forming our descending triangle. From this descending triangle, it's very obvious, and again, I was told I was spreading fear, right? People were spitting in my faces, as Crypto would say. They were laughing at me. They were joking. They were saying in the comments, what's he talking about? He's spreading FUD. But the descending triangle was playing out clearly here to the downside. And just as a caveat, guys, throughout this process, I've not sold my coins. I'm just looking for pullbacks to accumulate. So just to keep things 100% transparent with you guys, when I buy, I hold. That's how I do my work. I don't want to try time the market. A lot of people want to try time the market. I rather free up my bandwidth to go get more cash to buy on the pullbacks. That's how I play my game. So I'm now getting prepared for my next entry, which I'm going to share with you in this video. So make sure you stay tuned to the very end. So we formed this descending triangle pattern, and then we broke back into the larger wedge. And that is where we knew the issues would start, is when we broke back into our larger wedge. This line has just got moved. That was breaking my charts. So once we broke into this wedge, we knew then things will get messy. And now we very quickly have tanked from the top of the wedge straight to test the bottom. Now, there's 2 things that can happen. One, we can get a bounce, and we can, let's just get zoomed in here so I can show you the different eventualities. A few things that can happen here. One, we can get a bounce, try to work our way back to 41,659, then back to 43,000, 43.5, and try to get to the top of the wedge. Alternatively, if the bears continue to hold control, we may just tank straight below. Maybe even by the time I've recorded this video, we've then broken and started heading towards our lower price targets. Or the third scenario is what we were talking about over the last few days, which is when you've had a sustained move to the downside, you create a continuation pattern, a bear flag, and then a move again to the downside, continuation. This is a big move to the downside now. Maybe we get a little bit of a carrying calling off, at which point I would not be entering the market. I'm not going to fall for this, because then suddenly you get your move to the downside. Okay. Also, don't be surprised of any liquidations coming in right now for people who are being desperate to short Bitcoin on the way down. You could see a quick move to the upside, liquidating those before we then carry on back down to the downside. So a lot of market factors to consider here, but key story is what's going to happen. We need to watch this to the downside. If we break to the downside, our first point then comes in at around 36,700. That's from this pivot point here. Then we've got to look at this pivot point, and then we need to zoom out and say that's our next support here at about 34,700. Okay, so systematically we could see Bitcoin start to fall through these levels unless we're able to pick up support from one of these yellow lines here. Now, your technical price target from breaking out to the downside from Bitcoin here is at the bottom of the wedge. Now, I'm not saying this is going to happen, but we have to be prepared for it. Otherwise, that would be silly of us. And that would take you to 34,500 on Bitcoin. Now, I'm going to come on to what that means for the Phantom charts. We've got the Phantom charts ready here. We're going to look at the Phantom chart. But before that, I want to show you what's going on in the wider market. Now, we know, and again, if you've not watched my video from earlier, please go watch that because I explain it better than I'm going to do here. The market is correlated to risk on, right? So it's correlated to the equities market. And the equities market currently is down. It's down 0.5% on the Dow Jones, 1% on the S&P, and almost 1.6% on the high growth NASDAQ stocks, okay? And the reason for that is as follows. We are getting our CPI reading tomorrow, okay? That's our measure of inflation in the States. And as you can see, guys, from this chart, if I switch it across to the line graph, things are not looking pretty here for CPI in the US, okay? You can see kind of systematically how this has gone up. And tomorrow could be our first reading where we see a reading of above 8%, 7.9% in February. We're going to receive the March reading tomorrow, and that has a consensus to come in at 8.4%. That's the estimate. That's the forecast. And again, that's a high number. So regardless of if we beat that expectation or come in lower, it's not going to be great. The only way it's going to be better, the market could rally, is if we see something less than 7.9. But that is unlikely to happen. The effects of the interest rates take a lag. It's not going to come into play soon. And I think this is going to be the biggest reading we will see, is this reading. Now, anybody who understands how monetary policy and inflation and interest rates work will understand you're going to have a lag between when the interest rates are applied and when we see inflation improving. We're expecting this reading to be high for March, as that is when everything kicked off with the supply chain crises. You had issues with China and COVID, and you had issues with obviously the Ukraine and Russia war. So we're expecting this reading to be very high. If it comes in even higher than 8.4%, the market could panic and lose its bottom as well. So we need to be cognizant of these different factors at play. So we know that there's a strong correlation between what's going on in the stock market and crypto, and that is why Bitcoin is falling. It's nothing fundamental to do with Bitcoin. Obviously, definitely nothing to do with your individual altcoins, because all altcoins are getting decimated right now. We've got Ethereum down 6%. Ethereum, a massive cap, down 6%. You've got Atom down 6.4%. You've got Cardano down 8.4%. You've got Phantom, which we're looking down almost 9% now. You've got Solana down 8.5%. You've got ApeCoin down 11%. Cardano down 11%. Anything a little bit more risky is getting smashed much more. You've even got Luna down 6.3%. Avalanche down almost 7% today. So it is a red market, and it makes complete sense when you follow what's going on in terms of the inflation fears around tomorrow. Now, remember, the Fed meet on the 4th of May. 4th of May is going to be the critical date in terms of what are the Fed doing with the data they have in hand. They've got the jobless figures. They're going to have the CPI reading from tomorrow, and then they go in to make their decision of if they're going to increase interest rates at 0.25%, or they're going to do a double rate hike at 0.5%, or they're going to do a triple rate hike at 0.75%. Plus, they need to give details of how they're going to tighten the economy, quantitative tightening, in terms of how quickly they're going to suck the money out of the economy. All things for us to worry about. Now, coming back to Phantom, we're sitting here on the 4-hourly chart. What is going on with Phantom? And again, if you've been part of this community, did any of this come as a surprise? No. Why? Because I've drawn it here for you on the charts. I've been giving you daily updates. And if you're still not subscribed, please subscribe below. Now, we've entered this bear flag and we moved to the downside. And then what did I say? As we were in this pattern, I said we're forming a bear flag. And indeed, we broke down to the downside of the bear flag. What does the target tell us we're going to hit on the bear flag? The target tells us between 90 and 96 cents. Now, that doesn't sound fun, does it? But it's something we have to be cognizant of. The other thing we know is if Bitcoin starts to head back to the levels of 30, 33, 34 region, we know Phantom has been before to 103, right? If we head over here to the daily chart, you know that this low here at the bottom of this wedge was at 103. We were buying around 103, 104. So that's easier level we could be heading to if Bitcoin continues to deteriorate. If Bitcoin deteriorates too much, we could be posting a lower low here from the 103, heading lower than 103, which would not be ideal for this downtrend to the downside. Now, looking at the daily chart, let's bring out our EMA ribbon. And again, we got rejected. This is a clear rejection by our EMA ribbon, just like how we got here, just like how we got further up here. We're clearly in a very big downtrend here, quite extended from our 200-day moving average as well. Phantom is, this is a great opportunity to be getting ready for your nibbles, for your buys, if and only if you have high conviction. If you're going to buy now and then panic if this drops to 90 cents or 85 cents, you don't want to be getting into a coin like this. You're not prepared for it. You don't have the conviction. if you're able to buy and you know that, oh, if it falls to 80, if it falls to 90 cents, I'm going to be buying more and buying heavier, then you may start to have the right conviction needed to be buying a project like that. To switch over to the weekly chart as well, just to show you exactly what's going on. We got the thing which we were kind of fearful of, right? So I mentioned this before even this weekly candle printed, and again, we're seeing another weekly candle. We're getting rejected by our weekly ribbon. Now, this is not fun, particularly on a long-term time frame like this, because this took 3 weeks of hard work to rally here. But as you can see, it was just a relief rally to cool down after this big move to the downside. And this is not just for Phantom. We could look at this exact same chart for crypto and say, you know, we had a big move to the downside. This, we just briefly faked our way in on the weekly to turn bullish, and then we've rotated back again bearish. Now, if you watch my Bitcoin video, I explain exactly what this chart pattern means. If you're interested in knowing what this chart pattern means and explain what the long-term implications for crypto are, make sure you watch my video from Bitcoin earlier. I will link that up at the end of this video. So there you have it, guys, a blend of the technicals and fundamentals of why the market is so spooked. By the time I upload this video, Bitcoin could lose the bottom of that wedge. We could lose 40,000 and really start to see fear ingredients start to creep up, and the market's going to start to get really, really fearful. But guess what? For the veterans, for the people who've been watching this channel for a long time, we don't panic. That's when we roll up our sleeves. When things get greedy and red candles come in, we should have red candle disease, not green candle disease. When we see red candles, we go, okay, what's on offer today? When we see green candles like we did for the last couple of weeks, we chilled out. We let the market do its thing, right? So we do the opposite of what the fear and greed index and what the general market sentiment is telling us. But definitely do not be deploying your cash. It's not financial advice, but I would not be deploying my cash on a huge basis right now. I'd be nibbling on some of my favorite positions, but definitely I'm expecting more risk to the downside, as I mentioned in my video, which I posted over the weekend as well, which preempted that the Fed and all the fears around this is going to crash the market, and we're seeing the market start to fall to the downside. Now, I expect this, you know, longer term, I expect this to kind of be a nothing burger, but it's going to take a good few weeks leading up to the Fed meeting, the next interest rate hike, the next CPI reading, before the market starts to realize, oh, this is a bunch of nothing burger. We're okay. We can start to head to the upside. But before then, going to be fear, and I'm going to be taking those as opportunities. Buying the dip. As always, guys, thanks for watching these videos. Don't forget to smash up the like button and subscribe on your way out. As always, if you appreciate this type of content and you like my perspectives, consider joining my course member live streams, ijaz.uk/member. Do check that out. Message me on Discord if you have any questions around it, and we can get you set up. As always, don't forget to watch the video, and I'll see you in the next one.